Shareholders of Sembcorp Marine have given a resounding go-ahead to plans to recapitalize the company and de-merge from parent Sembcorp Industries. 98.76% voted in favour of the rights issue, and 87.72% approved the whitewash resolution, which waives their rights to receive a mandatory takeover offer from Temasek. Following the rights issue, Temasek Holdings will become a direct shareholder with a 30.1% to 58.1% stake in Sem Marine. Responding to MoneyMind, Temasek said that the transaction is timely for Sem Marine as it helps to address its critical liquidity needs. Sem Marine will use the funds to repay a 1.5 billion Sing dollar loan. The remaining $600 million will give it a buffer to tide over the current downturn.
Temasek will stand behind, and I think that they are ready for round two should things worsen.
With a lighter balance sheet, this allows Sembcorp Marine to go to the banks and get funding if there's any sizable projects in the pipeline to be chased.
The challenge, though, will be to chart a way forward in these challenging times. In this regard, it will have the support of Temasek. In that same email reply to MoneyMind, Temasek adds that it looks forward to working with Sembcorp Industries and Sem Marine to address near-term challenges and identify opportunities for long-term growth. While it was a done deal for Sem Marine, Temasek walked away from its bid to raise its stake in Keppel Corp to 51%. Keppel had failed to meet a key metric for the pre-conditional partial offer when its second quarter net loss fell below a minimum profit level required by Temasek. Temasek, however, remains the largest shareholder in the company with a 20.4% stake.
They won't make another bid for Keppel right now because they need to reserve ammunitions for where it matters most. Keppel, to its credit, even though it looks really ugly, the second quarter numbers. Yeah. But if you were to strip off the impairment, actually they are profitable and they're making like in excess of $200 million.
With the Keppel deal not going ahead, and with Temasek now a direct shareholder of Sem Marine, what's next for Singapore's O&M sector? Keppel has said it intends to engage Temasek to explore opportunities for strategic collaboration. Market watchers say what the sector needs is a consolidation.
It is more important now than any time in the last 2 decades because while we have seen troubled periods, the early 2000s, in 2016 again when the oil prices started to plummet. But right now we are seeing a whole new paradigm shift. The order books are evidently drying up, right? From record orders, like I said, in 2014, it is now just a fraction currently. Competition is also heating up. If you look at the yards over in China, in South Korea, they're actually combining, they're actually merging to become behemoths.
Both players will be able to reap the synergies from coming together.
We can actually see cost savings, we can see technology collaboration and sharing of proprietary knowledge. With that, if both of them can combine the capacity and technology know-how, they can compete more efficiently in the global arena against the Chinese or the Korean players.
And it looks like a merger is still very much in the works, according to Justin Tang of United First Partners. Mr. Tang specializes in mergers and acquisitions and special situations.
Temasek's partial offer for Keppel Corp was preconditioned on antitrust reviews in various jurisdictions. There is nothing to suggest that these antitrust reviews have ceased. So if these antitrust reviews have not ceased, then perhaps in the long term, not the near term, a merger between Keppel Offshore and Sem Marine is still on the cards.
But how will a merger between the two O&M players pan out?
There will be 2 main pathways to consolidating the sector. The first of which would be Temasek making a new offer for Keppel Corp at a lower price. Once that is done, Temasek could potentially sell Keppel Offshore Marine to Sembcorp Marine. The second pathway would be Sembcorp Marine, post the rights issue and demerger from Sembcorp Industries, acquire Keppel Offshore. Now, both would see Sembcorp Marine as the consolidating platform.
If this pans out, it would see the O&M division being taken out of Keppel Corp. A leaner Keppel would become more attractive to investors.
Keppel Offshore basically contributes only 1.4% of net income, but it makes up 24% of Keppel's assets, which means their return on assets is very low. So if Keppel Offshore is spun out, it would remove an overhang on the Keppel Corp shares. Long-only investors would then increase their weighting in Keppel because now it seemed to be a cleaner structure without the drag by the offshore and marine sector.
Even if a merger doesn't happen, and it is business as usual for Keppel Corp, market watchers see value in the stock. Keppel's shares have fallen more than 50% from as much as $13 that it reached in 2007.
I think at a certain level, Keppel Corp is really worth investors' attention because of its other businesses other than offshore marine. Those are doing fairly well.
For investors of Sembcorp Marine, though, they caution that investors will need to have the mettle to ride out the bumps in the O&M space.
Because it is so singularly focused on offshore marine, definitely it will be the one to get whacked the hardest during this onslaught. So if you are a Sembcorp Marine investor, you probably find consolation that Temasek is there. But on the other hand, it will be that the headwinds are very, very strong for at least the next 3 to 6 months.